Hello everyone, and welcome to this week's market analysis. In today's video, we'll explore the top 11 markets to watch for the week ahead, using the powerful insights of the Elliott Wave Principle. With the date set to December 1st, 2024, let's dive into the charts and uncover potential opportunities across key markets. Stay tuned to the end for a comprehensive overview. Since the beginning of September 2022, we have witnessed there has been a remarkable rise in the gold market. On the daily chart, we seem to be in a high-probability fourth wave corrective pattern, based on the rules and guidelines from wave principle theory that I have utilized in my analysis. It's important to note that identifying corrective patterns, especially in the fourth wave, can be challenging due to potential complexities like sideways corrections. For now, I encourage you, my dear friends, to exercise patience until at least the first three waves become recognizable. It's possible that the peak of this market could be exceeded. The bullish trend will continue only if the fifth wave extends beyond the third wave. I have also analyzed the 1-hour chart for a more detailed examination. Wave W represents a larger double zigzag. Following this, we observed a similar pattern with an impulse, which I have labeled a simple zigzag at the 61.8% and 78.6% retracement levels. We will likely experience several declines similar to wave W, occurring in at least three waves, before finally forming a double zigzag made up of multiple zigzags. According to my research, only the key prices mentioned in this analysis are significant. If you would like more insights, you can also watch the video from last week, which discusses the continuation of the bullish market into the fifth wave from the third wave to a larger degree. In the context of the DXY market, which represents the US dollar index, we can see distinct wave patterns in a series of price movements. Currently, we are observing wave A forming an impulse pattern. This implies that wave A is a strong and directional move indicating significant buyer or seller interest. Following this, wave B is expected to exhibit a simple or double zigzag structure, which I will clarify further. Let's focus on the 4-hour chart, where we can analyze the wave structure based on a simple zigzag. In this scenario, wave A remains an impulse pattern, reflecting a strong trend, while wave B transitions into a zigzag pattern. Wave C is anticipated to also emerge as an impulse pattern, but it appears to be incomplete at this stage. It hints at the necessity for a further upward movement to finalize its course. Looking at the 1-hour chart reveals a predominance of impulse patterns as well. Here, we observe wave 1, or A, behaving as an impulse move. In contrast, wave 2, or B, manifests as a flat pattern, indicating a consolidation phase. Subsequently, wave 3, or C, is structured as an impulse pattern. It's noteworthy that despite the general observation frequency being lower in the Forex markets, it is evident that as long as the price action does not breach the territory of wave 1 and remains confined within a specified range, the formation of an impulse pattern consisting of 5 waves or more remains plausible. Therefore, it's essential to keep an eye on critical price levels during this analysis. Furthermore, this analysis also extends to the 4-hour chart, where an alternative interpretation can be recognized as a double zigzag pattern based on the labeling under consideration. However, it's important to reiterate that the initial hypothesis centered on the formation of 5 upward waves remains the primary focus. Should this pattern deviate from that structure, we may need to consider it as a probable secondary scenario. Bitcoin has been experiencing a bullish cycle since November 2022, demonstrating substantial growth throughout this period. A key question arises: Are we observing the development of a larger third wave or a fifth wave within an impulse pattern? In the first scenario, if we concentrate on the possibility of a third wave, we can analyze the market structure in greater detail. Following a significant second wave correction, the data suggests that after completing 5 distinct waves within the bullish trend, we are now transitioning into a corrective phase characterized by 3 waves. This corrective sequence would ultimately contribute to the formation of an 8-wave cycle, which is expected to expand in alignment with the trajectory indicated by the third wave. It's important to highlight that typically, the third wave is marked by rapid growth, often associated with shallow corrections or swift price retracements. When we examine the 1-hour chart, we can see that the initial wave was structured as a leading diagonal. In this context, the third wave has also unfolded in 5 waves, fitting within the larger framework of the current third wave. However, there are complexities on the horizon, particularly regarding the fourth wave, which could present complications in its development. A critical marker for the continuation of the fifth wave would be the crossing of previous market peaks. This movement would serve as confirmation that bullish momentum is still intact and that we are on track to reach the anticipated targets for the fifth wave. Ultimately, once the impulse pattern has reached its conclusion, we should brace ourselves for the emergence of 3 corrective waves. These could manifest as either shallow corrections or sharp, rapid retracements, depending on market conditions. This forthcoming corrective activity will be crucial to monitor as it will shape the subsequent price action and overall market dynamics. The Euro-US dollar will behave similarly to the DXY. Following the movement of Wave A, we expect to see 3 corrective waves, with at least 3 waves occurring in a bullish market. In the 4-hour market, the first scenario suggests that Wave A forms a triple zigzag, while Wave B is a simple zigzag pattern. This simple zigzag acts as a connector between waves A and C. Wave C appears to be an impulse pattern, and the third wave of this pattern has already been completed. The fourth wave should not extend into the territory of the first wave and should conclude within the specified range, after which we can anticipate another decline toward the indicated targets. Wave 1, or A, is an impulse pattern, while waves 2 and B represent a zigzag pattern. The third wave has been completed, advancing approximately 123.6% compared to its preceding wave. The fourth wave has not yet been completed, however, it must not penetrate the territory of the first wave, and we can expect another decline once it is finished. The second scenario is characterized as a double zigzag. Pound sterling to US dollar analysis. In reviewing the daily chart from September 2022, I noticed that the advance marked as Wave A follows an impulse pattern. Following this, we experienced 1 wave down and 3 waves up, which surpassed Wave A. Currently, we are observing another decline that could potentially form a flat-running pattern. Wave C, which seems to be an impulse pattern, has not yet been completed, and we can anticipate another drop to reach the established targets. The 4-hour chart provides a more detailed view of this flat pattern. Wave A is a sharp zigzag pattern, while Wave B also follows a zigzag and extends to 123.6% of Wave A. Therefore, with the running flat corrective pattern in mind, we can expect Wave C to dip lower to complete the pattern, after which we should see another bullish movement, at least in the form of a simple zigzag. Checking the hourly chart, Wave 1, or A, is an impulse pattern, while Wave 2, or B, is a flat pattern. The extension of the third wave, which is equal to Wave 1, suggests that another downward movement may occur. However, Wave 4 should not enter the area of Wave 1 and must remain within the specified range, resulting in price action consistent with a bear market. I have also considered a second scenario on the daily chart, which suggests the presence of a multiple zigzag pattern that is likely nearing completion. This may lead to an advance in a bull market. A break in the price of Wave B of the zigzag pattern, Wave X, could confirm the continuation of the bull market and indicate the formation of new price action in the market. This week, I want to share my analysis of the current bear market for the US dollar against the yen. Based on my calculations and observations of wave patterns, I have analyzed the situation as a series of multiple zigzags. This could be indicative of a double zigzag, suggesting further declines, or it may develop into a triple zigzag. In my analysis, Wave Y has advanced between 100% to 123.6% compared to Wave W, with each wave following a zigzag pattern. I reviewed the 4-hour chart and identified an impulse pattern that represents our Wave A, or 1. The corrective pattern I have labeled is an expanding flat pattern that has completed its course, correcting between 61.8% and 78.6% of Wave A. It seems likely that we will witness another decline in this bear market. Please keep in mind the key price points in my analysis. For more insights, don't forget to check out the video from recent weeks, where we discussed the extension in the bull market. I have labeled the NASDAQ 100 on the daily chart as follows. After the first wave, which was an expanding diagonal, we observed a third wave that experienced an extension. The fourth wave formed a sharp zigzag pattern that corrected 38.2% of the third wave. Following this, we saw the formation of a leading diagonal pattern during the fourth wave. It is expected that, since a diagonal has formed, we will see a bullish advance until the fifth wave is completed and reaches our target levels. To examine the leading diagonal pattern in more detail, I have chosen the 2-hour chart. Each of the 5 waves represents an impulse, creating the leading diagonal pattern, with the second wave taking the shape of a flat expanding pattern. The next price action follows this impulse pattern and is succeeded by a significant correction. A key aspect of this analysis is the cancellation price. If the price at the beginning of Wave 1 is higher than that of the third wave, then any price action exceeding the peak of the bullish market serves as a more reliable confirmation that our targets will be achieved. Brent crude oil market analysis. In analyzing the decline in the oil market, I have labeled Wave A as a triple zigzag. Wave B can be identified as an expansion flat. The subsequent wave appears to consist of multiple zigzags within each segment, which likely indicates that there will be another downward wave to complete the remaining Wave Y. After this, we can expect a transition into a bull market as part of a corrective pattern, followed by another decline. For our analysis, we will focus on the 4-hour chart, specifically observing the price action after Wave B. Wave W is identified as a triple zigzag, while Wave X is a double zigzag. Wave Y is also expected to be a triple zigzag, with one more downward wave still to come. Following this final wave, we anticipate a short-term bull market, which will eventually complete the previous triple zigzag structure, propelling oil into a bull market. I will analyze the price action of the S&P 500 on the 4-hour chart during the bull market. Wave 1 is represented by an expanding diagonal pattern, followed by an extension in Wave 3. Subsequently, we observed a three-wave decline that completed the fourth wave, which served as a correction between the 23.6% and 38.2% retracement levels of the third wave. After the fourth wave, we experienced a bull market advance characterized by a leading diagonal, representing Wave 1, and a corrective pattern for the second wave of the fifth wave, which is expected to be larger than the anticipated advance in the bull market. On the 2-hour chart, I focused on the leading diagonal. Each of the 5 waves in this diagonal pattern follows an impulse structure, ultimately forming a diagonal pattern itself. Importantly, the fourth wave has not intruded into the territory of Wave 1. The second wave manifests as an expanding diagonal, followed by an impulse pattern that constitutes Wave 1 of Wave 3. The second wave is represented by a zigzag pattern, and the price action has successfully crossed the previous market peak. Any corrective pattern that forms will enhance the likelihood of a continuation in the bullish market, further ensuring the completion of the third wave. Keep in mind that the validity of this analysis depends on the price action. On the 2-hour chart, I focused on the leading diagonal. Each of the 5 waves in this diagonal pattern follows an impulse structure, ultimately forming a diagonal pattern itself. Importantly, the fourth wave has not intruded into the territory of Wave 1. The second wave manifests as an expanding diagonal, followed by an impulse pattern that constitutes Wave 1 of Wave 3. The second wave is represented by a zigzag pattern, and the price action has successfully crossed the previous market peak. Any corrective pattern that forms will enhance the likelihood of a continuation in the bullish market, further ensuring the completion of the third wave. Keep in mind that the validity of this analysis depends on the price action. Next, we turn to the 1-hour chart to analyze the fourth wave and the current price action. We observe 3 waves down, forming a zigzag pattern for Wave W. Following this, we noted bullish price action, which I referred to as a triple zigzag. Additionally, the subsequent 3 waves display a zigzag pattern, with Wave C taking the form of a diagonal ending. Current price action suggests that the fourth wave is indeed a double zigzag. The ongoing price movement appears to be an impulse pattern, likely still constructing a fifth wave. Any corrective pattern that arises after the completion of this impulse should ideally finish within the specified range or slightly lower. The key price levels from our analysis will be critical as we anticipate new price action in a bullish market. Furthermore, the corrective pattern could manifest as either flat or sharp and rapid. If not, there is a possibility that the fourth wave may develop into a more complex structure. Silver market and price action analysis in a bullish market. In our analysis of the silver market, we believe we are experiencing a bullish trend characterized by several waves. The initial phase consists of 5 distinct waves, followed by a second phase that resembles a double zigzag pattern. The third phase appears to be an extension that has now been completed. Since silver's price movements are heavily influenced by gold, we may currently be in the fourth wave. Identifying a corrective pattern can be challenging until we observe at least 3 waves of price action, so it is advisable to wait to see what pattern develops. If we are indeed in the fourth wave, it should adhere to a cyclical pattern. Examining the 1-hour chart, we notice a decline in the silver market. We have likely formed a multiple zigzag wave W, consisting of 7 swings, which carries a very high probability. The current price action may be taking the shape of a sideways pattern, such as a regular flat or an expanding flat, before we witness another decline in the bear market. This decline is expected to continue until at least 3 waves are completed, potentially similar to Wave W. The key price to monitor is the beginning of the recent decline. Additionally, be sure to check out Mr.NoBody's analysis of the fifth wave extension from last week, which can provide further insights. Thank you for watching. I hope this analysis helps you gain a deeper understanding of market movements and how the Elliott Wave Principle can guide your decisions. Don't forget to like, share, and subscribe for more weekly insights. If you have any questions or want a specific market analyzed next time, let me know in the comments below. Until next time, happy trading.